on here. Welcome, everybody. My name is Adam Nordin. I'm a partner at Goldman Sachs. Pleasure to be here today. One of the great things about my job is I get to work with all sorts of awesome companies like the various folks that we have here today. Today's discussion is about driving scale in education technology. So how do you move from being a small, agile startup to a mid-stage growth company? How do you move from mid-stage growth company to large-scale sector leader? And ultimately, how do you use that position to deliver student success at scale? I can't think of a better group of leaders to have this discussion with today. Each has scaled one or more companies to market leadership. They serve different markets, different business models, so the paths, the formulas for their success are each unique. And I think that they all would agree that it's not easy, but it can be done. And one of the reasons it can be done is that the intersection of education and technology is one of the most attractive markets in the world. So joining us today, Laura Ipsen, President and CEO of Ellucian, Adrian Ridner, CEO and co-founder of Study.com, John Katzman, CEO and founder of Noodle and Princeton Review and 2U, and Steve Daly, CEO of Instructure. So before we get started, I just want to get a little bit of input from the audience. So how many of you are operators versus, say, investors or in public service or professional services? Excellent.
Which hand are they raising?
Any hand you like. How many of you work for companies that are less than 100 million in revenue? Okay, less than 10 million in revenue? Excellent. More than 100 million in revenue. Okay, now we know what we're working with here. So let's just start with the fundamentals. Let's talk about the critical elements of transitioning from startup, agile growth company to mid-size to scale. So I'm going to start with John and Adrian. Give us some perspectives on what it's like to bootstrap a company. What are the most difficult elements to manage as you go from idea to proof of concept to commercialization? And what's the difference between going from 0 to 10 and 10 to 100?
I think a lot of people struggle with loneliness. You're just kind of out there figuring stuff out and talking to potential clients, and it really is, you get in your head. And once you hit a certain size, once you feel like, yeah, there's a there, and you're starting to add people, and you've brought in investors, there's a rhythm to business that doesn't change that much as you get to the next plateau.
Yeah, I think what I would say, and you meant 0 to 10 million, but I'm going to break that down a little bit more and say, like the 0 to the first 100,000 in revenue or 1 million in revenue do look very different. I would say, to me, the biggest difference between bootstrapping or not is, in either case, you have to be solving a problem you care about and you're passionate about. You have to be able to have a solution or a product that delivers outcomes. But when you're bootstrapping, you have less chances to fail. You don't have that cushion to fall back in. So you got to make sure you're really listening to your customer. You're really embracing data and iterating, knowing when to double down, when to cut your losses and move on. And you just have less chances to fail. The idea of pivoting, yes, you can do it. You just are not going to do it early on as many times. So you really have to be mindful. That doesn't change as you get to 100 million, 300 million revenue. It's actually really good to have in your DNA from the beginning, but it's something that is certainly very important when you're bootstrapping.
So the probability of having what feels like a near-death experience is higher as you're in those earlier stages. How do you?
Can I add just a quick one in here?
Yeah.
Just to interrupt, but. And I'll ask John and Adrian if they felt the same thing. I found when I was in a company that size, right, not only is it lonely, but you also find that your emotions are like, 180 degrees. One day you feel like there's no way I'm going to lose, right? We're just going to rule the world. And the next day you feel like there's no way we're going to win, right? We're screwed. We're going down, right? And so when you layer that in with that loneliness, right, it becomes a really tough place to be if you don't have an outlet, if you don't have a trusted advisor, a mentor, or somebody to go talk to. It can chew you up and eat you up alive.
It's why a lot of people take on partners. because there's somebody else to share that pain with. And I think it's a terrible reason to do that.
Unless they're a therapist.
It's very expensive, and it also can give you more loneliness and depression at the end of the day. But I'm sure there's some good ones. But yeah, I think it's a good point. The other thing is, you're responsible, no matter the size of the company, as the leader, to set the tone, set the vision, set the strategy, right? And that doesn't change if you're bootstrap, if you're taking investment or not. I think you mentioned mentors, having mentors and people that you can rely on to help you regardless of the stage, but definitely at the beginning and as you really are hyperscaling, I think it's truly important.
On the good side, by the way, and Laura, this is what you're dealing with. The good part of a startup is you start with a clean sheet of paper. And you don't have to worry about transitioning clients. You just have to, you're just only looking forward.
Yeah, I don't know. I didn't know we were in a group therapy session, but I'm feeling kind of good about it. But I think our job is to motivate, to embolden our audience, and be fearless, right? A lot of you are starting out, and I do agree, you know, sometimes I think, you know, we're in the billion-dollar club in terms of revenue, and there are days where I go, what's my clean sheet of paper? How are we going to scale? I have to be nervous and fearful of being a market leader and saying, who's coming after me? Everyone's coming after me. So when you think about it, like at every level, you have to really challenge yourselves to be brave, put your customers first, make sure you're solving their problems and what are the outcomes that you're going for, because you can fall in love with the technology, you can fall in love with a solution or a customer set, but I think it's really about pushing the boundaries and opening up your aperture for what are the possibilities as we're all transforming. My company was moving from an on-prem company to software as a service. That's a massive transformation. At the same time, EdTech and higher education is transforming. So there's a lot of fear right now, but I think we have to stay focused on what is the mission, focus on students, focus on outcomes, put the outcomes before what technology are we putting in the hands of the institution and learners.
So let's break down some of the components.
I'm feeling better too.
Me too.
Let's break down some of the components that we're talking about here, because I think there's qualitative elements like vision and passion, and there are also just execution essentials like people and capital. So let's start with the first. So vision, passion, and these are not exclusive to small entrepreneurial startup companies. They're just as relevant for very large scaled businesses. But, you know, is there an entrepreneur's mindset? How distinct is that? Can it be taught? Can it be professionalized? Or do you just wake up and it's there? Adrian?
Just because I'm in the middle, no. It's a great question. I think, you know, most entrepreneurs I've met had something that sparked them. But also I met a lot of professional CEOs who are running companies who have that spark and that passion. So I don't think it's something that is just innate, but I think it's how do you connect with what you're doing? Why are you pursuing that problem? Why are you trying to work in this space, in particular in education, right? For me, it's personal. As you guys know, I'm the first one in my family to graduate from college. I'm originally from Argentina. My brother Pablo has special needs, and you know, when he was born, doctors told my parents that Pablo wouldn't talk, wouldn't walk, wouldn't be able to learn anything. Fast forward now, of course, all those doctors in Argentina were wrong. He learns and runs and does Special Olympics, speaks multiple languages because we moved around. And I knew technology could solve that problem at scale, not just on the personalization, but also the lowering the barriers to costs, not just in this country, but globally. So I'm solving for that problem. I met a lot of other people who are running companies that are not entrepreneurs, who have their own story and their own passion, why they're here, why they're trying to solve for learners, for educators, or whatever industry they're on. So I don't think it's necessarily something to do with starting your own company only, but I think it's about a mindset and what drives you and how do you connect with what you're solving. And if you're in there just to make money or just to, you know, get rich, that's really not a reason to do it, and that won't work, but that's just my experience.
So let's talk about how we take that and then how you transition it as you scale. So one of the things that in my position, I've had the opportunity to hear many entrepreneurs describe as they'll say, I personally interview every single candidate for the company because I have to ensure that they're the right fit. And obviously, at some point, the company gets big enough that you just can't do that. And I think that's when passion and vision institutionalize into culture, because you build a team that can drive consistent values and hire people with consistent values. So how have you managed that transition, Laura, John, Steve?
Well, I mean, the first thing, going back to the vision and mission, doesn't matter what size company you have. If you don't articulate the vision, mission, what's your strategy, how you're going to execute and stay focused, you're going to go off track. That's so important. It helps you decide where your investments are going. For us, being owned by private equity, Blackstone and Vista, it's a clear message about how are we going to meet our targets, our goals? How are we going to grow the company? When you think about adding people and culture, you want to attract people that are there for the mission too, right? They have expertise, but if you have people that really aren't there for the mission, especially in higher education, I find that's when people aren't as successful. They're not collaborating. They're kind of there for one thing, and they tend to be siloed in their world. So that's how you build culture. I think the hardest thing is when you come into a company and it's not articulated well, and people don't have clarity on what is my job, what are the goals of the company. So that's really fundamental to success and growth, no matter what size you are.
Other thoughts down here?
So I 100% agree. That's the particularly in education. So I've run companies inside and outside of education, and particularly in our space, really having a passion for the mission is really, really important, right? And our customers know it when we don't. They know it when we're just approaching this as a business prospect and not as a partnership, and really trying to help them with their mission. So, but the challenge that I found is that as you start to scale, you get to a point where you really have to be much, much more focused on systems and process than you did when you were that startup and you were smaller. So back to the original question about, is it easier to innovate or one way or the other? My experience is that it is easier to innovate when you're small, in that it's just you, and I was in my startup was 4 people when we started, right? And it was much easier to have that. Everybody was just in it for the success of the company. And as you get bigger, you really have to figure out how to put those systems and those processes in place. So back to Laura's point, right? As you have to have that North Star to head towards, because there is no way that you can personally ensure that everybody is rowing in the right direction, that everybody understands the mission, and everybody is on board with the mission. And so it is an interesting dichotomy, and it is, what is entrepreneurship? Back to the question. You just have to recognize that if what you want is, as a CEO, is to interview everybody and to be there, that's great, but you're only going to scale so far, because there has to be a leader in there that knows how to do that through systems and process. And that's, for some people, that sucks, right? Because that's not the fun part of the job.
I think we're starting from that there's a mission and a vision and a strategy, and the job of the CEO is to explain that to both customers and employees. But to me, the nature of entrepreneurship is, number one, to start with a mindset of looking for problems and looking for figuring out if there's a solution. And I see a lot of people coming out of Teach for America, or in the K-12 space in particular, who are very mission-driven, who see problems and are crafting solutions. But the other part is saying, does that solution scale? What's the addressable market? Is this a problem big enough to be an enterprise? And it's only when you get both of those that there's a starting point for the rest of the conversation.
So, Steve, one of the comments, it just made me think, as you're talking about the interrelationship between innovation and creativity and scale. So one of the things that I think all people appreciate for startup companies and entrepreneurs is that you have sort of, a great deal of flexibility to be creative, to be innovative, to be agile, to pivot, to change strategy if the strategy needs to be changed. Is that at odds with scale, or how do you preserve it as you continue to scale?
Yeah, no, I don't think that those two are mutually exclusive, right? I think you have to do things differently, though, and it's as much about, I guess scale is the right word. It's not how big your company is, but it's how many, in my opinion, how many customers you have, right? Because once you start to, when you're trying to figure out product market fit, you can just pivot. You're not going to leave a bunch of customers behind. But once you start to get a customer base, then you are, to a certain extent, a slave to that customer base. And that's where I think the challenge becomes in scaling a company, is recognizing that there are certain things that your great customers are going to want that may not be that super innovative next thing, right? And so how do you create the culture within the company to be able to experiment with those things that we think are coming, but also keep that existing customer base happy? And it's absolutely possible, right? And I've seen it work really well to have that. But you have to recognize that you've got different parts of the company that have a different remit when it comes to what type of innovation you're going to be doing.
Which I agree with, because lots of times we think innovation, that's happening in our R&D and our product organizations. But I think the most important thing when you scale and you're thinking about pivoting and doing something that may be out of your traditional wheelhouse is that you have to have that spirit of curiosity and innovation and empowerment to your teams, still focused on what the outcomes are. Sometimes you have to set some of that aside. Jeffrey Moore said, carve out that innovation fund where you protect it against everything else. Because in larger companies too, if you get into stressful times, then you lose those abilities, and that's just got to be part of the culture throughout a company, whether it's in your marketing organization, it's your people team, wherever it is, the spirit of innovation. Just like AI, right? AI is not just about the product organization, R&D, and how are we going to use it in solutions. For us, it's a culture across the company. It's how we think and how we work, and we bring it across all the functions.
Yeah, I think what we're describing is finding the way to integrate agility and institutionalization. So if we focus on strategy for a moment, how do you find the right balance between staying the course, so you have a vision, you have a strategy, and we're going to execute it with discipline, or knowing when the moment is to pivot?
So I set out some years ago to blow up the OPM industry. And as that actually worked out, we realized we looked a little bit like an OPM, and we were kind of in the proximate area of the blast. And we had to really change how we positioned ourselves, how we priced, how we thought about the company, to make sure that if we were successful in taking down the industry, that we weren't a victim. Getting people to change internally, it has to come from the CEO. And it has to, because there's so much inertia. There's so many people who have KPIs and metrics, and we're a tiny fraction of you guys, but we're over 100 million. Like it's a going concern. And everybody has their metrics, and you're messing with them. So it's much harder than it seemed.
Laura, what's your experience been?
It is harder than it seems. When I got to my company, we were many decades of lockdown on-premise software. We do it a certain way, we deliver a certain way. I got to the company, I'm like, let's go. I moved from the Valley, and it was my wonderful head of people is in the audience now, but my former head of HR, we moved it to people, ran up to me, is like, oh my God, you're asking so many questions, and you can't move too quickly and change things. And it was like, we must change. We will not serve the nearly 3,000 institutions around the world in 50 countries if we don't transform, because the whole world of software is moving to this thing called cloud and SaaS. But getting the DNA of a company that behaved a little bit more like higher education, which we love, but let's lead with tech and innovation so we can help deliver the future, to go from a lockdown on-premise software to SaaS to an open interoperable platform where we love partners, but before we really didn't. It's a massive transformation. And I thought, year 2, I got this, like cloud first, people first, customers first. It takes time. And you have to be repetitive and super focused and repeat yourself over and over again. Align your investments and then find celebrate the wins, right? To celebrate the early wins. When you pivot and change, you have to put a spotlight on the teams and the people that are doing it right to incentivize others. Oh, they made it. That's what success looks like. Let's go. Right. But those are hard transformations to make. I was at Microsoft at the beginning when we were moving to cloud, and many other companies, and these transformations are tough, but you have to put the vision and strategy. You have to incentivize your teams. You have to spotlight the performers that start to make it happen so others move. You have to have a little patience as well. I don't have a lot of patience, but it's the human side, right? In a company or in higher education, when things are transforming and you go to an institution and, all your jobs and the workflows and everything's going to change, you have to really focus on the human side of it in addition to the business process and where the technology is going, because they're jobs and people and how they're used to working for decades. That was the same with my team too.
Yeah, and to tie a couple of themes together, because I think it's a good lesson, regardless of when you raise your hands in terms of the stage. We're talking a lot about, at the end of the day, culture, but what is culture, like the mission, vision, and how you bring core values and how you bring them to life. We're talking about human behavior, right? And we're talking about the larger you are, you want to start building capability from day one. The larger you are, the more important it is that you're building that capability at scale. The earlier you can integrate some of these things into the DNA. We talked about agility. The other one that I think is really important is adaptability. It's never been more important than now. If you don't have that in the DNA of every individual, which then will make it so it's in the DNA of the teams, which then will make it so it's in the DNA of the whole company as a whole, it's going to be really hard as you scale, and it's never too late to start. But the later you are, if you don't have it in the company DNA, for us, if we didn't have that at the beginning, now that we have 35 million learners and educators on the platform, that we have 2,000 team members across the globe, we couldn't be able to continue to innovate. And I think that that's important. So agility is important, but adaptability and being able to understand, what you need to do next, as not just as an individual, but as an organization, as teams. Because at a large enough scale, they're the 1 and 2 people, but it really is how have you built that into the DNA so the whole organization can really execute and follow that strategy at scale. Otherwise, you're not going to succeed.
So let's move beyond the organization to a challenge that I know each of you has experienced at one moment or another, and probably many of the participants in the audience have seen, which is how do you take that culture of innovation driving forward using technology, so all that the technology curve accelerates forward, and address that with a customer set that may not be ready for the pace of change, may not be ready for the technology itself, and how do you find the right balance? Because in the end, they're the customer, they'll buy what they're ready to buy, but the technology curve oftentimes meets a behavioral resistance curve in education.
I would just say at the beginning.
I'm not going to call on people. Just if it's on top of mind, go for it.
I would say at the beginning, you have to understand your customer, their goals, their strategies, their pain points. So if you go in talking about, I have this great piece of technology and software to sell, forget it, right? That's not the way to build the partnership to help them understand what will this technology help enable to hit your strategic plan, to address the enrollment cliff. Those are the things that you nurture. I think it's also important that you share your values. We're a company that's focused on putting students first, students at the center. Everything we're building and investing, the majority of it is really focused on better student outcomes. The partnerships that we have in our platform, we want those to grow to benefit students and learners lifelong. So I think it's really important to build the trust, to talk about their pain points, outcomes, their strategies, what's important to them, and also to understand what is their capacity for change. how can you help them with that? Because many leaders, a new president going into an institution, and there's one that I'm very close with, is like, I have to replace almost all of my top leadership to transform a small private institution to transform. So you have to understand what pain are they going through at what point in the journey, and what is their ability to embrace new technology, and where do they need it most? And it may not be you, but where do they need it most, and how do you partner with them? How do you support those changes?
I think I would go back to the comment that John made earlier, which is, look, you've got to solve problems. And so if you're trying to solve a problem that it isn't front of mind for your customer, you're just going to be pushing a rock uphill. There's some products in our portfolio that we launched about 10 years ago that are just now starting to become important to our customers, right? And so we've been trying to push that that value proposition forever. So I think I'm just reiterating what Laura just said, which is, look, you've got to understand your customer, and it's a two-edged sword for us as technology companies. In one way, your customers are giving you the time to really work this out, right? You don't have to worry. My old company was sold IT infrastructure to corporate IT, enterprise IT, and it felt like I said once to one of my confidants, I said, look, when I get done with this, I'm going to open up a tire store because I am so tired of getting disrupted every couple of years, and it was tough, right? And so in our space, we actually have a customer that moves with at pace, but it gives us an opportunity to really figure out how to solve those problems when they need it with the technology, the latest technology that can apply to the problem. So I think it's actually a blessing to be in this industry, as well as, at times it can be a little bit frustrating because what the technology could do if we could help them with that change process.
And Steve, you've probably seen in some of the work you've done, moving Canvas into all of California, the community colleges, like find the innovators in the model that you can really scale. So that's important, is to find the lighthouses and those beacons that will help you scale, because there are always going to be some that many will be pausing or pushing back because the transformation and change is hard, right? You have to always recognize, like, what are we changing, why, how are we going to do it, and what does it mean for everyone in an institution in particular?
So it could be a lighthouse, an early adopter, that you can then show people, but it could also be a little bit more violent, that you can totally understand what a customer needs, but be proposing solutions they're not ready to embrace yet. I had a mentor who said, sometimes when you're leading, you should look behind you because maybe you're just taking a walk. And there are times it's hard. Right now, the way higher ed does financial aid is a disaster. There's no other industry that's anything like it. Like, if everybody pays a different price to an airline for their seat, but they don't tell you how much you're going to be paying when you get to the airport. Like, there's a coherence to how every other industry prices and describes pricing. Just an example, there are like 10,000 articles about how much more expensive higher ed has gotten over the past couple decades, whereas in fact net tuition has been flat to inflation for 20 years, and nobody talks about it. So you go to schools and say, look, you are absolutely hurting yourself in the way you do financial aid and the way you package aid, and we can help you drive enrollment and disrupt the industry by leading on moving to a new pricing schema. And they're like, yeah.
Interesting. It's progress without change. Let's go to the fourth component we outlined earlier, which is, so we've talked about vision and strategy and people. Let's talk a little bit about capital. There's a relationship between access to capital and the ability to scale. How critical is it? What are the trade-offs? And let's get specific. So angel investors and VCs, for those in the audience who may need or be seeking capital, what should they expect? How do they approach? How do you raise? How do you not give away the whole company?
Let me hit really early stage, and then you guys can talk later. Understanding your TAM, understanding how big this really is going to be, realistically, tells you how you should raise money. If this has potential truly to be a several $100 million company, that's VC backable, which means you can take angel money, because those angels who are going to get you out into the middle of the lake are expecting somebody to come in afterwards who's a professional investor and get you the rest of the way. If this is a smaller enterprise, that's fine. Just don't fund it like it's a large one. So the starting point is really understanding TAM.
How about on the private equity side? Laura, you could comment here, and Steve, you've seen sort of all sides of this equation. How do you find the right fit? How do you select the right partner?
Hopefully they select us. No, we're lucky. We have Blackstone, the largest private equity in the world, Vista, 50/50, largest in enterprise software. And the most important thing for us in terms of their investments are clarity on the vision, strategy, what our growth initiatives are, how we build the metrics for them, our ability to continue to hit them. And that opens up confidence, trust, and investments, whether that's in what we're doing across the company. We've invested significantly in R&D since I've been CEO in the last 6 years, $1 billion in R&D and in our overall solution. So that's very compelling. It's helped us gain market share, but also in the ability to acquire. And M&A is very important. So we're a build, buy, partner company. It's just, we have to set the strategies around what comes first. Sometimes it's sometimes it's opportunistic. Sometimes it's something comes our way. So that's really what we work to do is make sure that our private equity owners understand what we do. They've been with us, the last partners for the last about 2.5 years. And so it's just building the predictability, the model that they invest forward in. And we've been very lucky to be able to execute and share the goals of what growth looks like across moving our customers from on-prem to SaaS, global growth, expanding our platform, selling our student success capabilities onto our open SaaS platform. So we're all very aligned, and that's how you get the capital investments and keep that going. And
one of the things that's unique about your partners is not just that they're obviously very well-established institutionally, but the particular funds that are invested in your organization, the Vista Perennial Fund, the Blackstone Core Fund, that's an investment horizon of 12 years for core, 20 years for perennial, which means
I'm pacing myself.
It's a very long-term hold, but is there an advantage to being able to invest for the long term? Because in many respects, education is a long cycle business.
Well, it is, and when they made the investment and they talked about the different funds, and they asked my opinion, I said, the most important thing is to build surety and confidence for the institutions we serve. So they get nervous sometimes, like private equity, and how many years, and are you leaving, and is the team going, is everything going to change? When they see long-term investments, very strategic investment, not just in us, but other EdTech companies, which both of them have, it builds confidence that, hey, these are partners they're investors, but they are partners for the long run. They want good things to happen in education. Certainly they're not a non-for-profit, but they are interested in growth, and growth means success of the institution. So we're so well aligned in that respect.
Maybe Adrian, please.
Sorry, I just wanted to, if it was okay, disagree with the premise of your question for a minute, although I know it's your business.
You can disagree with me too, though.
Absolutely.
I agree with what you're saying, but I'm going to disagree with the premise of the question for a second, which is, when we're talking about capital, the only way to get a stage is an early stage angel, VC, private equity. There's another way to get capital. It's called revenue. And that's a fantastic way to get capital. And it's not just for the first couple of million. So we invested, not $1 billion, but $200 million over the last 3-4 years back onto the platform. And we raised exactly $0. And I think that no one talks about it. Now, that's hard. That requires a different set of of behaviors from a company and understanding. But you can do it when your product is driving outcomes. You can do it when customers are referring each other organically. There's a lot of things that have to come together. But when those things are happening, you can invest a lot of capital and do it at scale, not just in the 0 to 10 or the 10 to 50 scale. You also have to know how to manage your expenses and how to invest, and that's very reason for, well, not just EdTech, but sustainable growth, which we've always been about, and all the companies and entrepreneurs that I mentor, I talk about quite a bit, regardless if you raise capital or not, was crazy 2 years ago. It's like growth at all costs or you're crazy. Now it's very much in fashion. But if you do that from the beginning, you can find capital from revenue, and it's really good. It doesn't mean there's not great partners, right? There are great partners in the ecosystem, and it's important to understand who they are and how they can help you. But usually when there are those great partners, it's not just about the capital. And I think that's something to keep in mind to find the really great.
Absolutely, it's amazing. They noted the paths are all different. So opposite end of the spectrum, Steve and John, you've been public before. Let's talk about being public. What are the pros and cons? Is there a strategic advantage to having access to capital, through public markets, the ability to attract and retain talent? And maybe on the flip side, is it true or not, but is being under the responsibility of managing quarter to quarter a challenge relative to making investments for the long term?
Going public is a lot of fun. It really is. Being public is a circle of hell. I have no interest in doing that again. It's why I left to you before the IPO. I just too many scars. So I'll leave it to you.
What do you really think?
Yeah, how do I follow that? I think I think you start with the original question that John brought up, right? Is how big is the market you're going after? What is your vision? How big do you think you have to be in order to be successful? Because there are so many advantages of scale, particularly in this market. And frankly, education deserves companies that are going to be around for generations, right? Because of the pace of change and because we're dealing with human lives and the potential of human potential, that the industry deserves companies that are built to last, that are going to be around for generations. And so whether you go the private equity route or you go the public market routes, I think there's pros and cons for both of them. My experience is when you're in private ownership, particularly if it's really concentrated, which private equity tend to be, like to take majority positions. It's really easy to make decisions with your board, right? You get in, you talk about it, you show the business case, you show what it's going to take to invest and to grow this business. You get them behind you, and you've got your board, hearts and minds with you on that. When you're a public company, then the circle of hell becomes, now you've got a huge number of constituents that you're talking to, and you're trying to convince that. And my experience so far is that they'll give you the latitude to make those investments that are maybe a little longer term, but it just takes so much more splaining, right? You got to be out there all the time and meeting with them, and you may turn over some investors, and so it is a little bit more. I would say there's a lot more overhead in a public company. But on the flip side, we found that when we went public, we were able to attract and retain talent. It was much easier to attract and retain talent. There were some definite benefits. The visibility that our customers got into the business, right, and the understanding that they could have, that allayed some of the fears that tend to get blown out of proportion about private equity ownership, those types of things. So there were some definite benefits to us from a business perspective, but just recognize it's another source of capital that comes with a lot of overhead.
Awesome. We've got about a minute left here. Let's talk about M&A. M&A, a basis to scale. Laura, you've obviously managed through some significant transactions and integrations. John, you've built and sold a number of businesses. Steve, you've just done a couple of large acquisitions. How do you think about that relative as a tool to scale I think the benefits are obvious. What are some of the challenges and how do you work through those?
I'm happy to start. I joined Ellucian when it was already Ellucian, which was the combination of DataTel and SunGuard. But when I got in, I think one of the things I clearly saw for the first year, I had employees that would put their signature on an email and they would tell me if they were DataTel or SunGuard. I'm calling it Ryan Banner, our ERP. So it took me a good 10 months to a year to erase that, because the power of an integration is about the people becoming one team and moving and elevating parts of the companies that you acquire. So a lot of it's around the culture. So the biggest M&A or the merger was forming Ellucian. When I first got to the company, I think M&A is a really powerful tool, but I was in a position as a market leader that the most important thing for me to do was to modernize and embrace the market that we already have and scale that and move it to a modern platform. That was more important. Even though we looked at M&A, many opportunities, we passed on many of them because the most important investments I was making was in ourselves, in our team, in the roadmap that we had. Anything that I did to stray away from that could have been very detrimental to the company, but more importantly, our customers who were relying on us to get them there. As we kind of have made that pivot and really accelerating SaaS and have a whole platform for everything, now it's actually very enjoyable and fun building. We have a whole plan on what our M&A looks like, and with Blackstone and Vista, we've acquired 2 companies, Campus Logic and most recently EduNav, both focused on student success and well-being. So now I can look at the market that we have, the TAM of what's to come. When I look at things like workforce and enterprise learning, there's some really exciting things that are mission critical for where we are in higher education, really tying the students, their plans, whether in 2-year, 4-year, their degrees and capabilities to the workforce to give them surety when they ask and their parents ask, what's the value of a degree? We got to help shape that. Because institutions, if you heard Michael Crow this morning, he said, I can't remember which country it was, maybe it was Poland, they're going to be here in 500 years. I feel it's our responsibility to help higher education as they transform to be there. Technology is simply an enabler. So M&A and all of the companies here and EdTech, like, bring it on, let's flourish. And the successful ones, you know, it's very exciting to look and say, how does that fit into the ecosystem of what we're building to power this transformation?
Awesome.
But there are challenges, right? You know, with everything, you just have to focus on your integration plans.
For sure. I think we're close on time here. Steve, do you want to make a final comment?
I would say it's another source, right? What M&A, where M&A gets interesting is what you're basically doing is you're letting somebody else go figure out product market fit and you know, whether customers are willing to pay, and so it can be a great part of the strategy. Particularly as you become a market leader, as you start to get some of that scale. But I would, the only thing I would add is, well, not even add, I'd just plus one what Laura said. It is a big lift. It takes a lot of cycles out of the organization, and you can't really. My experience is you can't really create a team that just does acquisitions, because it has to become integral to your company, right? And when you start to talk about culture and those types of things, it's more like a marriage when you bring people together, right? You can't just say, okay, you're going to be like me, you know, because what I do. We tried that when I was at Intel for 10 years. In fact, I think every acquisition that I was involved with at Intel failed because we didn't recognize, we couldn't bring in new cultures into the organization, and so you got to it's a lot of calories.
Well, and Steve, I think you said something really important, that no matter the size of what you acquire, it's about the people and culture. And if you have a culture that's open to onboarding new types of people and cultures, that's very powerful to broaden, you know, the culture that you already have, and not to be siloed and to learn, because every acquisition is not just about what is the technology you're bringing, it's the people and how you learn to grow your impact in the market.
Great. I think we have overstayed our welcome here, but very much appreciate all the insights from the panelists, and good luck to all of you with your future endeavors.